are made up of events and transactions with third parties. Therefore, disclosure of related party transactions, therefore disclosure of related party transactions and balances is necessary. You know, if one of your major customers is another group member, or if one of your major customers is a shareholder or director, you ought to make that disclosure. Partly because if I'm looking to buy your business, I become the shareholder, I become the director, and that customer may then melt away in a future year. So it is necessary to understand what is going on. We want to be true and fair. We want to be true and fair. We want to be complete. We want to be transparent. We want the users to be able to understand. If we are ethical, we have got nothing to hide. If we are ethical and we have transacted with our directors and we have transacted with our other group companies, we have got nothing to hide. We believe in transparency. We believe in telling the owners of the business the accountability as to what has gone on. And anyone in the exam who argues, oh, let's try and hide it, let's try and sweep it under the carpet, well, that's the breeding ground, isn't it, for corruption and unethical. So good corporate governance is based around the principles of transparency, understandability, accountability. Yeah? So, we need to understand who are our related parties. So we need to be able to identify related parties. We need to be able to identify related parties. Identify related parties. So if we are the company, I would argue that there are, in broad terms, 4 different types or 4 different categories of related parties. There are 4 different types. There are 4 different categories of related parties. Now this is both very technical, but actually at the same time is pretty much common sense. 3 of these 4 you should know, just out of common sense. So, never mind my wife and my wife's cousin and all of that kind of stuff. Let's think about a business. Let's think about a company. Let's think about the company as some kind of vulnerable entity. Who is the company related to? So, yeah, okay. So what we've got is we are related to group members. Right? So there's lots of these. You are related to your parent, and you're related to your parent's parent, and your parent's parent's parent. So you're related to your parent. You are related to your sub. You are related to your sub-sub. So anyone who is a parent and anyone who's related to a sub. You're related to your fellow subsidiary. So you are related to your brother and your sister. So you're related to your parents and your grandparents. You're related to your children and your grandchildren. And you're related to your brother and your sister. So you're related to your parent, you're related to your sub, you're related to your fellow sub, you're related to your joint venture, You're related to your associate. So you're related to your parent, you're related to your sub, you're related to your fellow sub, you are related to your joint venture, you are related to your associate, you are related to the joint venture and the associate of your parent, and you are related to the associate and joint venture of your parent. So you are related to basically anybody who is in the group. You are related to basically anybody who is in the group. Yeah? Parent, sub, associate, joint venture. Yeah? So these are related parties. Good. Who else might you be related to? Apart from a group context. Not every company is a member of a group. Some companies don't have a parent and don't have a sub. They're just a business. Who might they be related to? Yeah, directors. I'm going to say key management. I'm going to say key management. Now, the key management would include directors, but key management is wider than directors. You can have the corporate treasury officer, or the company secretary, or the president, or somebody who is in the shadows, or somebody who's an alternate. Anybody who has authority, anybody who has authority within the company is key management. Not every single member of staff is going to be a related party. It's only the bosses. It's only the people in charge. Whoops. So key management are related. So are their husbands. So are their wives. So are their children. So are their brothers and sisters. So if the company transacts with a director's spouse, if a company transacts with a director's relative, that transaction is also a related party transaction. Because otherwise, the director would be very easily capable of circumventing the disclosure by hiding behind, a close family member. So as an anti-avoidance system, you need to have the idea of close family members also being regarded as related parties. Who else is related? Other group members? Directors? Shareholders, shareholders. Now, the point about shareholders, it's a little bit like key management. Not all employees are related parties. It's only the employees who are able to influence the company, the directors, the management. And with shareholders, it's only the shareholders who are able to influence the company. Shareholders who have significant influence. Shareholders who have significant influence. In other words, there's a rule of thumb there, shareholders who have got more than 20%. Group members, key management, shareholders. They're the obvious form of related parties. The obvious form of related parties. Now, the one that you probably would never get is the pension fund. So, if we have transactions with our pension fund, then the transaction with our pension fund would also be regarded as a related party. There's another way of thinking about this. If we have control, it's a related party. If the company controls somebody, if the company controls the other party, it's a related party. Or if the company is controlled by that other party, it is a related party, because then the company is potentially vulnerable. Significant influence. Directors can influence the company. Major shareholders can influence the company. So anybody who is able to control the company or influence the company, or if we're subject to common control. If we're subject to common control. Me and my brother, me and the subsidiary, me and my fellow subsidiary. I don't control my fellow subsidiary, I don't influence my fellow subsidiary, but we're both controlled by the same entity, and therefore that would enable us to say we are related parties if we transact with each other, because we've got the parent company who is in control of us both. So, a related party relationship has at its heart control, influence, or common control. Now, I know this is a bit negative, but I'm just conscious of the time. So let me give you an example where we are not related, because, normally, if you're given a situation, you can assume it is a related party transaction. But there's a couple of tricks. If you've got two associates in the same group, the two associates in the same group are not related to each other, because neither control or influence the other, and they're not subject to common control, they're subject to common influence. So, two associates in the same group are not related to each other. All right? Two associates in the same group are not related to each other. And your fellow joint venturer, now I've got to be a little bit careful when I say this, so I do a little diagram for you. A is related to the joint venture, B is related to the joint venture, but A and B are not related. Yeah? A and B are not related. So just a little diagram there. A, B are not related parties. A third one where you are not related is if you have a common director. So if I'm a director of company A and I'm also a director of company B, that does not automatically mean to say that A and B are related parties. They might be for other reasons. So two companies simply because they have the same director. Two companies simply because they have the same director. So just simply being influenced by the same party does not create the related party relationship. There has to be control, there has to be influence or there has to be common control. But yeah, the two companies will not influence each other, nor will they be subject to common control. We must make a disclosure of related party transactions. We must make a disclosure of any transaction between related parties. So, for example, even if there is no consideration passing, it would still be regarded as a transaction. If the director guarantees the company's bank overdraft, that guarantee is a transaction that would need to be disclosed in the notes to the accounts, because it puts the bank overdraft in a preferential situation in terms of security. A user of the accounts would need to understand that the bank have been guaranteed. So it does not necessarily mean to say that we're looking at money changing hands. So transactions need not involve consideration. Transactions are material in the context of the individual rather than in the context of the company. If you look at Patronus, the level of materiality for Patronus is going to be massive. But if they're transacting with a director, if they're transacting with an individual who is a related party, you've got to look at materiality from the perspective of the individual rather than from the perspective of Patronus, otherwise there would effectively be no related party disclosures going on. Materiality is considered from the perspective of both parties. So don't just say it's immaterial to me, I'm a big company. Yeah? So materiality has to be considered from the perspective of both parties. What are you disclosing? The nature of the relationship. What are you disclosing? The nature of the relationship. It's a director. What are you disclosing? The nature of the transaction. It's a loan. What are you disclosing? The amount. We lent a director 10 million ringgit. Yeah? You are disclosing the nature of the relationship, it's a director, the nature of the transaction, it's a loan, the amount of money involved. You would disclose any year-end balances. And you would disclose any amounts that have been written off. All related party transactions must be disclosed. I do not want to hear it's at arm's length, it's a normal transaction, let's not bother to disclose it. I don't want to get involved in any form of discussion as to whether it's at the right price or the wrong price. I just have a blanket requirement. All related party transactions must be disclosed. Note, disclose all.